Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at how the USE minis unfolded yesterday, which was Tuesday, August the 26th. I wanted to do it today because, looking at yesterday, because it's a good look at the cyclical nature of trading. This is something that I teach in our training webinars and shows how markets go through cycles, not in their patterns, but in profits and losses of systems. In other words, if you're trading a system, you'll go through a time when it's profitable, you'll go through a time when it's when the signals are quiet, and you'll go through a time when you have losing periods. In other words, the sort of system goes through cycles, and this is just the natural way markets unfold. So if we have a look at the ES on the 3-minute chart for yesterday, you can see we had two automatic MTPredictor trade setups. The first was a TS3 buy setup here on a blue STF. If we place the analysis on, you can see that this would have taken you into a long trade. Remember, we use correct position sizing to vary the number of lots, contracts or shares to keep your initial risk small and under control. But this would have resulted in a losing trade. The market came down and would have stopped you out for what we call a -1 hour loss. Then later on there was a TS3 sell setup. STF was black, neutral trend, therefore standard traders would be able to take that. In this case the market came down to the first target here and just came out at the first target. STF strength band was weak, so you would have come out to the first target for a 2-hour profit. Again, position sizing is taking care of the keeping the initial risk small. So this is a good example of how position sizing keeps your losses small. So the first loss was -1 R, the second profit was +2 R. In other words, you made +1 hour profit overall, even though you had one profit and one loser. This is the great advantage of using correct position sizing. So it means you don't have to have a high percentage of winning trades to make money overall. Let's have a look at the YM. YM was even quieter, where we only had one TS3 buy setup here. This was the same place as the ES. If I place the analysis on, again this would have been a losing trade, but of course you wouldn't have taken both of them because you wouldn't have traded the ES and the YM. But it's important to understand that you will have losing trades or losing days. If you were only trading the YM yesterday, you'd have had one loss, and you'd have come out at the end of the day with a losing day. It's important to show this, to show that all systems don't make money on every single day. It's just physically not possible. Let's have a look at the NQ. The NQ was an interesting day where we had STF was blue. We had a buy setup here of this TS4 buy setup. Let's place the analysis on that blue buy bar. We placed the analysis on. The market actually went up to the first target very nicely. And if we look at the day as a whole, this TS4 was set up as of the bar of the low of the day. The market went right up to the first target, and you'd have been taking profit at pretty much the high of the day. The result was a nice profit of +3 R, in other words 3 times the initial risk. Again, position sizing taking care of our keeping our initial risk small. So this was actually a great day for the NQ, going long just off the low of the day and taking profit just around about the high of the day. It's about the best you could have done yesterday. Sell setups here, or one sell setup here, because it was a double top, was on a blue STF, so you wouldn't want to do that. There was a pyramid opportunity here, but if you had a pyramided here, you would have been stopped out on that for a -1 hour loss on that pyramid. Or if you were a bit more aggressive with your stop loss management, once you pass the 100% initial risk level, which we have there, you may have brought your stop to break even. Let's have a look at the Russell Index. Russell Index, again a relatively quiet day. STF was blue, so you'd be taking long trades, therefore not that sell setup up there. You'd have been taking the long trade there, you'd have been long. You wouldn't have actually reached your first target there, so you'd have been stopped out probably on the close for a +2.7 hour profit. So not a bad day for the Russell Index there yesterday. But the reason for doing the video today was to show you that not all days are highly profitable. There will be days where you have losing trades and small profits. There will be days like on the YM where you only have a losing trade and you come out with a loss on the end of the day. And there will be days like on the NQ yesterday where you basically catch the very low of the day and catch the very high of the day for a very nice profit. So this is what the whole aim of today's video is, to show you the cyclical nature of trading, to show you that markets go through cycles where you have periods of good trades, where your big profits come through. You have periods of losing trades, that's where position sizing keeps your losses small and under control, and then you have another period of when it's basically quiet, or you do very few trades, or you just make small profits and small losses and you basically don't go anywhere. So it's an important thing to understand that when you're trading is that the markets, or particularly your results, will go through cycles, and knowing where you are in that cycle is very important to understand how your system's unfolding.